percent or so no big moves, but it's trading in the positive. 5,662 is where it's at, and the target price is at 7,256. So yes, a fair bit of upside expected on shares of Indigo by B&K Securities. They maintain that India remains a highly under-penetrated travel market, and aircraft supply constraints will ensure that demand overstrips supply going forward, and that will of course bode well for the airline. They are building in an EBITDA PAT CAGR of 20 and 22% over FY25 and FY27. The stock, according to B&K Securities, is trading at 20 times FY27 earnings per share. So yes, those were some of the movers, but let's understand whether we have Kranthi back on with us or not. Kranthi, if you can hear me. I don't think we have Kranthi with us. Then, Kranthi, can you hear me?
Listen to you.
Can you hear me?
Yeah, I can hear you.
Okay, great. So, what I was saying was over the last 10 years, we have seen July giving positive returns. So, we have seasonality factor in our favor. But we also have the July 9th tariff deadline looming. In case, a deal doesn't fructify, would that be a big dampener? Would that be the next catalyst for the market? Because we're not very far from all-time highs now.
Yeah, Nandita. Yeah, markets also waiting for the tariff implication that are going to hit the market. But by and large, markets are preparing for the tariff implications going ahead. What we can expect from these tariff implication is, again, some kind of a knee-jerk reactions. I don't think so. By the tariff deadline that comes, every country is going to have a bilateral agreements with the US administration. But there would be a knee-jerk reaction, what we can expect because of these tariff implications. The entire saga of this tariff exercise is going twist and turns. Not only with India, it's happening with every country, including all the major trade partners of US. So definitely it's going to give some kind of a knee-jerk reaction going ahead. The commentary also uneven. And because these are all policy decisions, and also every country need to protect their interest with respect to their trade, and the consumer and producers are concerned, it have its implications. But we need to see how the entire smooth transition of these tariffs we need to see in the next couple of weeks.
Okay, we need to see, what really happens ahead of the July 9th tariff deadline. But let's talk about sectors then. How are you approaching the IT space now ahead of earnings? Because Accenture, if that were to go, anything to go by, the guidance was upped, but we saw deal bookings, disappointing. And of course, rate cuts being delayed in the US. Discretionary demand may remain under pressure for quite some time. But if you look at the IT stocks back home, we've seen good traction in the last few weeks. How are you approaching it? What is your read through? What are your expectations when it comes to the IT names?
Nandita, in the medium to short term, there is a lot of uncertainty with respect to IT pack is concerned. One thing is, of course, there is a complete uncertainty with respect to US budgeting and the operation expansions are concerned, and also the rate cut overhang also still there with respect to IT companies are concerned. But given the kind of the Indian IT companies and their business models, how they weather through different times of it can be various trade cycles the IT companies have witnessed. On a medium to longer term perspective, IT pack looks attractive in terms of the valuation is concerned, despite of this medium to short term uncertainty. So if the investor is a long term investor, definitely one can add IT companies in a very staggered manner. But definitely the trade implications and also the US growth prospects are going to dampening the sentiment of the IT companies in the medium to short term. On a relative perspective, the IT companies' long-term averages are sometimes whenever there is a correction in the Indian markets, it looks the IT companies they trading below the long-term averages. That's where we can see some kind of a cherry picking taking place with respect to IT companies. It can be the large cap and mid cap IT companies are concerned. And there is also a domain specific and geographic specific play also playing with respect to the IT companies. Until unless if I am an investor who want to keep my money for a time frame more than 3 years, one can venture into IT companies in a very staggered manner. Medium to short term, definitely there's going to be some kind of a overhang is going to be there with respect to Indian IT pack is concerned.
Okay, that's the view on IT, looking at buying, staggered manner. What about pharma? For generics like Dr. Reddy's, the Revlimid, patent expires in Jan 2026. That would be a big gap, right? And some of the brokerages have come out with reports where they've said that that EBITDA gap, will be difficult to plug. But on the other hand, you have the GLP-1 opportunity as well. Which are what is the segment within the pharma pack that you prefer now? Would you look at CDMO? Would you say that CDMO has better prospects, or would you say that generics are looking okay, and perhaps they would be looking at ways to plug that Revlimid hole as well?
And at this juncture, by and large, we are quite neutral with respect to pharma pack is concerned, and the overhang of both the trade and also company specific implications are concerned. They're going to weigh on the pharma pack is concerned in the medium to short term. But by and large, we are looking for companies which have a domestic centric in terms of their revenue models are concerned. We are slightly varying with respect to the companies which have more about the US exposure. That's where we are a little bit cautious in the medium to short term. But right now, we are quite neutral with respect to IT pack is concerned. It can be any company. By and large, we are looking for the domestic growth drivers at this point of time to make any kind of serious investments. If there is any kind of a great value buys that took gums with respect to the companies which have the global exposure, that's where we are looking forward in a very company specific way. But by and large, the export oriented pack, the companies which have more exposure towards the global exports are concerned, we are slightly varying in the medium to short term.
Okay, that's the view, neutral on pharma. But what about consumption? Are you seeing any signs of pickup in urban consumption? How would you really play the consumption theme? Would it be via rural, given the fact that inflation has cooled off? You've got the rate cut cycle also, underway, and tax cuts were announced in the budget. There's a good monsoon as well. So, in light of all these tailwinds, which end of the spectrum would you look at?
With respect to consumption is concerned, Nandita, we are going very positive with respect to the consumption theme is concerned. It can be the rural as well as the urban consumption pack is concerned. The one way is consumption can be divided into FMCG and also the high end of the consumption also taking place at this point of time. Still, the consumption demand is not factoring into the companies at this point of time in terms of the listed space is concerned. But definitely there is a pickup of consumption. The consumption cycle is at a uptick, and the key worry and overhang with respect to the rising crude oil prices, which has been hammering this consumption theme and also the inflation theme in the medium to short term in the last few days. Right now, we can see some kind of a downtick in the crude oil price. And what we believe is, despite of these geopolitical concerns that do create some kind of a knee-jerk reaction with respect to the crude oil prices are concerned, what we believe is the long-term crude oil is in a bear market, which is completely favorable to Indian markets. As and when there is a geopolitical issue that's taking place, when there is a complete escalation, we tend to see worrying about the crude oil prices. But what we believe is it's a medium to short term phenomena, and the longer term crude oil prices are completely in favor of markets like India. But we need to see how this trend is going to be. Whenever there is a geopolitical issue, they are going to create some kind of uptick and a spike in the crude oil prices. So when the crude oil prices are trending in a downtrend, the inflation came to control, and we got a bonanza and bazooka of kind of a rate cut we got. And if the rate cut cycle is going to continued, so we can expect some kind of a consumption to pick up and a credit growth to pick up going ahead. That's where we are looking forward in the medium to short term. And also the Federal Reserve rate cut is still, it's an overhang at a global scale is concerned. But the domestic, if the inflation is going to cool down further, we can see some kind of a credit growth that's going to continue. We had a early monsoon, but the progress of monsoon has been little bit slow in the couple of first few weeks of the monsoon progress. If the monsoon progress well in the coming weeks, definitely we can see the rural consumption also taking a uptick that will fuel the consumption story in India going ahead.
Okay, one more question on defense then, in light of all the geopolitical, disturbances, right from Operation Sindoor, we've seen defense coming back in a big way. But last couple of days haven't been all that great. We've seen profit taking kicking in. But now, globally there is news flow. NATO has agreed to hike defense spending by 5%. And of course, Indian manufacturers also stand to gain. But what is your overall view on defense? Do you think valuations are, matter of concern, because orders are flowing in thick and fast, but execution, that's what Street really needs to watch out for. So what's your overall take on the entire defense manufacturing pack right now?
Nandita, we have been quite bullish about the defense space is concerned from the past 3 years, and the defense have been one of the outperformer for our portfolio in the past 3 years, and we continue to have the same stance. The defense is going to outperform in the medium to long term. But in the recent past, as you rightly mentioned, from the recent geopolitical escalation between India and Pakistan from Operation Sindoor, we have witnessed defense stocks have been rallying more than 50 to 100% in some companies getting recovered from its bottom. So on a medium to short term perspective, they're fully priced in. We need to see the defense companies at a very stock specific, and also the way they operate and what kind of product proposition they have. We can't tag all the defense companies at the same theme at this point of time. Of course, I tend to agree with you. There can be some kind of froth in some kind of a companies, but by and large, the large cap space is concerned, like Hindustan Aeronautics, Garden Reach, Mazagon Dockyard, Cochin Shipyard, BEL, these kind of names are concerned. They tend to priced in at this point of time, given the kind of current valuations are concerned at this point of time. But definitely, if the market gives any kind of dip, one can buy these stocks in their portfolio on a medium to longer term perspective, because of there is a clear cut earning visibility, and also order book visibility is there for these companies. Definitely defense are on a longer term basis. Definitely any dip in defense companies, it's a warranted buy for the investors. We also having the defense theme itself. Right now, the aviation theme also playing with respect to defense aviation is concerned. So there are some kind of positive developments that are taking place. These developments are going to have a long-lasting impact in the medium to long term. So that's where the opportunities can lie. The MRO business in the defense space also looks very attractive. In the civil aviation, MRO looks very attractive. And also the companies involved in the aircraft engine making is concerned, these companies also throws a very good opportunities for the investors in a medium to longer term. So as well as to sum up, the defense space is concerned, definitely any dip in these stocks is a good entry level for the investors, and one can accumulate these stocks for a medium to longer term perspective.
Okay, that's the view on defense. Lastly, tactically, which are the sectors that you would prefer right now?
Uh, Nandita, it's going to be very stock specific at this point of time. We are going to enter in the next couple of weeks into the earning season. And right now, buying the value is the crux in this market. When anyone is a hardcore value buyer at this point of time, looking for these values, one need to have to wait patiently. And whenever these kind of knee-jerk reactions, the global geopolitical escalations tend to offer, that's where we are picking up the stocks in sectors like power, as you mentioned, any dip in the defense, and also the engineering and infrastructure theme is concerned. It's look very attractive to me. And also the discretionary consumption also themes looks very attractive to me. Whenever the market takes a knee-jerk pause and when there is a